Hello, this is Bill Scheid from Applied Finance Research, and recently I've been thinking about the value of our SOBR volatility stop and our short positions, especially as it applies to volatile market conditions and bear market conditions. So let me walk us through what we've got here on the screen. So in column C here we have a list of years that we backtest. And then column D through F is total return for three different systems. In column D, we have just the basic SPY buy and hold. And then we have PMA SSO, which is our double leveraged PMA system. And then we have PMA SSO, but now adding the shot over the bow rule, that's our volatility stop, and our short positions. Now in columns G through I, instead of total return data like we had over here, now we have maximum drawdown data. And again, we have that for the S&P buy and hold, we have that for PMA SSO, and then we have that for PMA SSO with SOBR and shorts. So let's just take a walk through some of this data and just look at what we see here. So I want to start with 2008 because, of course, as you know, that's the year of the financial crisis. So let's talk about total return first. So the S&P dropped 36.8% that year. That was pretty rough. I remember that year. PMA SSO made 6.6%. So right out of the box, that's a big beat, right? What's the 43% beat, right? And then over here, when we add SOBR and shorts, it turns out that PMA SSO returns 25.7%. So now we're looking at closer to a 60% beat on the SPY. But let's also take a look at maximum drawdown, right? Because we know that was a super volatile year. Let's look under the hood. So S&P had a maximum drawdown of 47.6%. That's so brutal. PMA SSO out of the box with no SOBR and shorts had a maximum drawdown of minus 2.2%. And when we add the SOBR and shorts, it had a maximum drawdown of minus 7.5%. Now, so we do see that SOBR and shorts added a little bit of volatility. So our maximum drawdown jumped from minus 2.2, which is practically nothing, to minus 7.75, which is also practically nothing when you compare that to the maximum drawdown of the SPY, which was minus 47.6. So we really see a huge value in, especially in 2008 in this down year, to adding our volatility stops. It bumps our return from 6.6% to 27.5%. Oh, sorry, volatility stops and shorts, right? So that's the impact of both together, with just a slight increase in our maximum drawdown. So that's outstanding. I love to see that in 2008. That gives me great comfort for whenever the next crisis is going to show up. Now, of course, we did have a crisis in more recent history, and that would be COVID. And I want to take a look at two things. I want to take a look at both the return of the system in 2020 when COVID first hit, and then also in 2021, because I think the way that the system performs coming out of crashes is also important. And just to look at that here, when we go back to 2009, we see that the S&P had a good year as it was climbing out of the bottom of the financial crisis. It returned 26.4, but PMA SSO returned 45.5, and with SOBR and shorts we lost a little bit, 41.0, but still a nice beat on the S&P. So we see that when the market was tanking, we made money, and we see when the market was recovering, we made money. So we love to see that. Let's jump into 2020 and the COVID crash. So we see that S&P returned 18.4%, PMA SSO 11.9%, not bad, did not keep up with the S&P. So if alpha is one of your goals, you just want to be aware of that. However, when we add SOBR and shorts, bam, 23.8%. So it did end up beating the S&P once we add SOBR and shorts. Maximum drawdown for the S&P, that's a pretty big max drawdown, minus 33.7. Minus 24.0 for PMA SSO out of the box. However, when we add SOBR and shorts, here we see a much less drawdown, and I think that has to do with our SOBR stop getting us out of positions and our shorts helping us to catch some of the downside move that was available from that 33.7% drop. Now let's take a look at 2021 where the market recovers. So here S&P bumps up 28.7%, PMA 60.6, and with SOBR and shorts also 60.6. The S&P had a maximum drawdown of -5, and here we had a maximum drawdown of roughly -10 for both configurations. So in all, in summary, what we see is that the PMA SSO system is an excellent system in terms of how it plays defense and in terms of how it catches opportunities when the market rebounds. And we also see that SOBR and shorts really add a lot of value, especially in the context of this system. And we see that for a lot of our BMR systems and a few of the other PMA systems as well. So just thought that was an interesting walkthrough in the numbers, something that had been on my mind, and I thought I would share with you. Thanks for watching and happy trading.